Hey everybody, JJ here on the BX4. It is Sunday, September 17th, 2020. Thank you for joining me. Today we're going to talk about the Deutsche Bank incident or revelation. We're going to talk about what happened in 1971 and show you some pretty eye-popping charts, in my opinion, on what happened after what happened in 1971. We'll get into that. And what is going on with the housing bubble? Well, we can find out very easily how the housing market is being propped up by looking at a few statistics. We're also going to talk about credit card debt. Before we get into that, real quick update on my Patreon channel. On my Patreons, thank you for your support. And I actually am revamping my Patreon channel. I just did an upload earlier today, and it's going to be zero politics. I'll explain over there. So if you're my Patreon, go to the link below. I'm going to put the text right now. Just look below here. And in this recent upload, I got into the origins of how I became interested in finance and the economy, economics in general, and what kind of started waking me up to the financial system from a very early age. And as we continue on Patreon, I'm going to get into some more topics that fall a little bit outside of this channel's highlighted content. And it's going to be zero politics going forward because it's very divisive, and I got some negative feedback on some other information that I had discussed over at Patreon. So zero politics going forward. Join me over there. Let's get into the news. Now let's start off right here. We've spoken about this many times, how the gold and metal markets are rigged, they're manipulated, they're altered, and recently ex-Deutsche Bank gold traders found guilty in spoofing trial. Now, spoofing is orders that are put in to try to manipulate the buying and selling, in this case of precious metals, on the paper market. Now, the jury's still out as to whether this causes long-term price discrepancies. This was mostly intraday trading manipulation, but there's many people that say this does affect the long-term price, and we do see that physical gold and silver has been disconnected from the paper price, for a very long time, and it's only up until recently, the last 6 to 8 months, to where we've seen gold and silver actually start, making the moves that many had been anticipating that they should have made for many years now. So this is likely the tip of the iceberg. We know that Chase also was implemented in some of this type of activity with the spoofing and the manipulation, but we'll have to see where it goes and how much bigger it actually is. But some of the world's biggest banks are doing some very crooked things. All right, next, let's talk about what happened in 1971. 1971, Nixon took us off the gold standard. That meant that instead of being tied to gold, the dollar became completely unleashed and completely detached from gold. And we saw what happened in the consumer price index. This line right here is 1971, and we see consumer prices skyrocketing. So the cost of living, it's no coincidence that you see it explode after Nixon took us off the gold standard. Right? No coincidence there. It's no secret then when banks can lend out money they don't have, money that's not tied to any commodity. You could say it's tied to oil, but as far as being convertible, it has not been convertible or tied to a commodity since that very important event in 1971. So we see the inflation that's caused by the unlimited printing and how it affects the consumer price index, cost of living. And not only that, we know that financial stress and financial arguments are the #1 cause of divorce. And look what happened also in 1971. Divorce rates also began skyrocketing. And this chart shows each different color line in each age group. And the younger age group in this line right here looks like the color teal maybe, 18 to 34. Well, that's the lowest age range for divorce, but give it a few years and the stress and the arguments continue, and we see that the older people get, the more likely they are to end up in divorce court. Right, but again, no coincidence that in 1971, that's when we really began seeing the uptick in divorces. Another recent article here out of Mishtalk, the Fed's balance sheet now contains over $2 trillion of mortgage-backed securities. So you wonder how they can keep the housing bubble inflated. Combine that with the fact that nearly 70% of homeowners with mortgages have loans somehow supported by the federal government, Fannie Mae and Freddie Mac, two government-sponsored entities. Buy many loans from lenders and package them into investments that are akin to government bonds. Right? So with unlimited printing becomes, so from unlimited printing, currency creation powers, comes the ability to infinitely keep price bubbles inflated. Right? So banks have no reason not to make loans if they're just going to be bought up by the federal government, and the Fed in this case. Okay, and many of these same lenders charge people 17, 20, 25% interest on their credit cards, while offering you, for your savings, for depositing money into these institutions, offering you maybe a fraction of 1% or 1% if you're lucky. Now, I just did a video over at my backup channel on the three best credit cards that offer 0% right now for balance transfers. I'll also put a link down below for that. But if you're carrying a credit card balance each month, if you're not paying it off in full, if you're paying that high rate of interest, try to look for a balance transfer at 0%. Sometimes that gets too much where you can't continue to play musical cards and transfer that balance. But here's a recent tweet out of Yale. Sophia, she says the following quote: "I just sent my dad an email describing my credit card debt. Where do I pick up my Medal of Bravery?" Also, Jade tweeted out the following: "Credit card debt is the stupidest thing I've ever done to myself, LOL." Alright, so unless we get some sort of massive debt forgiveness, American consumers especially are in a lot of trouble as far as debt and carrying these balances. You combine the younger generation, you combine their student loan debt, their credit card debt, the rising cost of living, unlimited currency creation out of the fiat funny money, monopoly men, bankers, and you got a recipe for disaster. And both parties, and that's why I say earlier that I'm not going to get political anymore over at Patreon and even here on this platform, because both parties are involved. The left and the right are in on this scam against the American people, and we've got American people now fighting about other things and not really paying attention to the big scam of the financial system. But you and I, we know we're onto the game, we're onto the trickery, we know what they're doing, and we're going to continue to prepare on this channel by accumulating assets. I'm buying metal now that the silver price has dropped. I'm mostly getting silver, very little gold now, because the gold to silver price ratio is completely out of whack from historical standards. So silver is the place to be in my opinion. Also link below for that as well. Sorry about the background noise. We've got some friends of the family over here and it's kind of noisy. It's going to be all for this update. We'll see you this week, probably tomorrow, Monday, another report. Thanks everybody for watching. Appreciate you being here. Bolt to the bus. Bye.